Hi friends, welcome back to FinveStocks. Today we are going to see multiple candlestick pattern. What are the various type of multiple candlestick patterns? How to trade on multiple candlestick pattern? All these things we will see in this current video. Before jumping into multiple candlestick, one should know what is a candlestick and what is a single pattern candlestick. So those who are new to this video, I request kindly to watch the earlier video. It's mentioned in the I button. If you are new to this channel, please do consider subscribing this channel. Also don't forget to like, comment and share if you like the video. So what is a multiple candlestick pattern? In a single candlestick pattern, we need just one candle to identify a trading opportunity. Whereas when we analyze multiple candlestick pattern, we need 2 or 3 candlesticks to identify a trading opportunity. So that is called multiple candlestick pattern. Wherever the number of candlestick is more than one, we can call as multiple candlestick pattern. Now let's see the multiple candlestick pattern in detail. First one is the engulfing pattern. The engulfing pattern needs 2 trading sessions to evolve. In a typical engulfing pattern, you need a small candle on day 1 and a relatively big candle on day 2, which appears to be engulfing the previous candle. So in an engulfing pattern, if it is appear on the bottom of the trend, it is called bullish engulfing pattern. And if the engulfing pattern appears on the top of a trend, it's called a bearish engulfing pattern. Bullish engulfing pattern typically forms at the bottom of a downtrend. So here if you can see, this is the bottom of the downtrend wherein P1 candle forms a bearish candle and P2 forms a bullish candle. This bullish candle completely engulfs the bearish candle. The candle P2 will close at a level which is higher than the opening of P1, which forms completely engulfing the P1. Engulfing means it will completely swallow. So here in this example, P2, that is the green candle which will completely swallow the P1 candle, which forms an engulfing pattern. Once the pattern is formed, then this uptrend, this continuous buying trend will continue and it will form a bullish uptrend. The prerequisites required for the pattern are, first one is the prior trend should be a downtrend. P1 should be a red candle confirming the bearishness in the market. So this candle is the P1, which should be a red candle reconfirming the bearishness of the trend. The trend is downward trend and the P1 will confirm the bearish trend. Then the next candle, that is P2. P2 should be blue or green, which will show bullishness and it should be long enough to engulf the red candle. Here this candle completely engulfs the red candle. So it will form a bullish trend and this bullish trend will continue for upcoming trading days. Let's see the strategy of bullish engulfing on a DLF chart. It shows it is continuing a downtrend and suddenly it forms a bullish engulfing pattern. So the first candle P1 is opened at 163, then it reached to a high of 168 and it touched the low of 158.5 and then it closed at 160. Shows it's a bearish trend continuation and it is completely a bearish candle. Then the next candle P2 will open at 159.5, which is near to the close of P1. From there, it will show the buying interest at the lowest point and it suddenly start moving up. So the P2 candle opens at 159.5, that is near to 160, start moving up to a high of 170.2 and closes at 169, which shows a completely engulfing on P1 candle. Then this buying trend or the uptrend continues for a 2-3 trading sessions. So one can trade this pattern to ride the momentum. So the risk takers can take a buy call on this pattern at the level of closing of P2, that is here, and they can ride the momentum for upwards. So the stop loss for this should be the low of P1 or P2, so it will be somewhere here. If you are risk averse, then you can wait for one more day, that is the next candle from P2, that is this candle we can call as P3. So at the closing of P3, we can make sure that whether this candle is red or green. If it is a green or a bullish candle, then the trade we can execute. So now let's analyze how the trade goes for a risk taker versus risk averse in a different chart. So we will take Sipla chart for example. In Sipla chart, the downtrend is continuing and it forms a bullish engulfing pattern. So here this one is the P1 and P2 is a bullish candle. So the risk taker will take a call at the closing price of P1, that is somewhere here, and they can write the profits for uptrend, and they will put a stop loss which is lower point of P1 or P2, that is somewhere here. So the stop loss is here, entry is here, and they can buy for a target of say 10% or more. So the risk takers will be in a good uptrend. Similarly, if you see risk averse, the risk averse will wait for the next candle, that is the P3 candle. So P3 candle forms a pin bar on the bearish side. It's a red candle. So the risk averse will avoid this trade. Even though the market is going in an uptrend, the risk averse will avoid the trade and they will be missing a good trading opportunity. So now the doubt is in a bullish engulfing pattern whether we should look for body or for wick. So one can consider engulfing in with respect to body. Suppose in this case the body is up to here and the green candle or the blue candle which is a bullish candle which will engulf the complete body, that is sufficient. No need to check for engulfing the whole tail of the candle. Let's see some of the live chart for bullish engulfing pattern. So we will open kite for that matter. So let's start with HDFC Bank. Whether we can find some bullish engulfing pattern in that bank or not. So here we can see the downtrend, and here forms the P1 candle and the next candle is P2. So it is a green candle which completely engulfs P1. So it forms an engulfing pattern, bullish engulfing pattern, and the uptrend continues. For risk takers, they can start buying at P2 at the end of closing of P2. And for risk averse, they can wait for the next candle, and the next candle is turned bullish, is green. So they can also continue buying from here. So this is an example, live example on HDFC Bank. So we will see some further examples. So we will see whether some chart is forming on Bata or some Reliance. So if you see in Bata, we'll check for some engulfing pattern. Here we can see one engulfing pattern is there. So it is on a downtrend and it forms a bearish candle on the last P1. Then the P2 candle which completely engulfs the P1 and the uptrend starts. So here if you can see, if you are a risk taker, then you can initiate the trading at P2 at 1658 and after that you can see an uptrend. If you are a risk averse, you will wait for P3 candle to form a bullish candle. So here in this case it's a bearish candle and you will avoid the trade and you will miss out a small uptrend. And again it forms one more bullish engulfing next to that. Here you can see 3 days of continuous downfall and the fourth day that is also a bearish candle, and P2 candle forms a bullish candle and it completely engulfs the previous candle. And here also you can see an uptrend. So these are two examples on Bata. So we will take one more example. So we will see chart of Reliance. Reliance, whether we are getting some bullish engulfing pattern or not, we will just see. So this is the live chart of Reliance. So here you can see one bullish engulfing pattern. So this is a downtrend starting from 2600 and continuously it is falling down, say 7 to 10 trading session, and it form a bearish candle P1. So the P2 candle which opens lower compared to P1, and suddenly the trend changes and the buying interest came in and it goes up and it completely engulfs the P1 candle, forms a bullish engulfing pattern, and the trend continues. So if you are a risk taker, you will buy at P2, and if you are a risk averse, you will avoid this trade. So being a risk taker is advantageous if you see bullish engulfing pattern. So you can take a trade based on engulfing and you can ride the momentum for a good upside. So that's all about bullish engulfing pattern. So in our next video, we will see what is a bearish engulfing pattern, and we will see some of the live charts and some examples. And in upcoming videos, we will go more into detail of different type of multiple candlestick pattern, morning star, evening star, white soldiers, all these patterns with examples we will see.
Please do like if you like the video and don't forget to subscribe to get the notifications of upcoming videos on personal finance and stock market. Please post your valuable comments. Do follow the Friday Basics to make your stock market journey easy. Thanks for watching and have a good day.